Good morning. So 10 minutes, so I'll jump right in. Skeena is in the Golden Triangle of Northwest British Columbia, like Rob just mentioned. Before I get to the project, I quickly wanted to talk about the team. Skeena as a company has been around for quite some time, but when Walter Coles, our CEO, stepped in 2015, we really worked on building out the team. Skeena has 2 past-producing mines, and in order to do this in British Columbia, you really need to take a team approach. So we just brought a new VP of Exploration, Paul Geddes. He left Barkerville to come join us. We brought in Justin Himmelwright, who's our VP of Sustainability, deals with all our environmental permitting and First Nations issues. And we've got amazing technical expertise. Ron Nedoletsky, our chairman, and Ron Nichols, our chief geologist, are accredited with the discovery of Snip and Eskay. So it's really an amazing team that's leading the way in the Golden Triangle. So we've got 3 projects in the Golden Triangle. GJ at the top is our copper gold porphyry project. We have a PEA out on this project, but it's not really our focus. We're actually looking to spin it out into a copper-focused company or sell the project off. Our focus is really Snip and Eskay Creek, the 2 high-grade past-producing mines. So Eskay Creek, if you're not familiar with it, when it was in production from 94 to 2008, it was the highest grade gold producer in the world. It produced 3.3 million ounces at 45 grams per ton and 160 million ounces of silver at over 2,000 grams per ton. So extremely high grade past producer. We signed an option deal with Barrick just in December of this past year. So we're well on our way to earning into that option. I would note the cutoff grades when the mine was in production, they range from 12 to 15 grams for the mill feed, and the direct shipping ore, there was about 50% mill feed, 50% direct shipping ore. The direct shipping ore ran 30 grams per ton. So our thesis for acquiring this was very simple. What material was left behind that was below that 12 to 30 gram per ton cutoff grade that existed when the mine was in production? So we inherited a very large database, over 700,000 ounces of drill data, and with that we just released a maiden resource estimate on the project a few weeks ago. So before we put our first hole in the ground, we were able to put out a resource, and we were pleasantly surprised with what was there. And there's a little video embedded here that will show you the resource. So one of the reasons we were so keen to get our hands on this project and also Snip, which will show up here, is because of the vast improvements in infrastructure since the mines were in production. So you're going to see our 3 projects there, GJ, Snip, and Eskay Creek. And then we'll zoom in. There's a road, Highway 37, that goes all the way up to Imperial Metals Red Chris mine. There's also the Northwest Transmission Line, which is a big billion-dollar investment by the province to bring power into the north. And then lo and behold, within the last 5 years, 3 hydroelectric facilities have been built right in between Snip and Eskay Creek. So what was once remote is not anymore. We can tap into that 6 cent a kilowatt hour power that Rob was talking about. So now we'll zoom in on the resource here. There's a little drone video that'll show up that'll give you an idea of the kind of terrain that we're dealing with. It's really not that bad considering a lot of the areas in the Golden Triangle are covered with glaciers. So you can see it's pretty rolling meadows, and we'll zoom in on the drill here. So even though we have started drilling, it's not included in the resource that we just put out, but we're doing infill and metallurgical drilling right now. So there's the drill just about a month ago in the 21A zone. And now we'll zoom in. We inherited over a substantial amount of underground workings. So everything you see there in gray is either stoped out or historic underground workings. And then everything in color is the resource that we just announced. So the resource is split up between open pit and underground. There's about 1 million ounces, 1.1 million ounces underground and about 850,000 ounces in the open pits. The open pits will just pop up there in red. The open pits are grading 5 grams per ton on average, and the underground resource is averaging 10 grams per ton. So it's a very high-grade deposit. So what we're focusing on right now is infill drilling. Because there is no historic mining in those 2 open pits there, we want to bring the inferred category up to indicated, and then also start metallurgical testing, because this is a deleterious deposit. But it was mined before, and I'm sure we can mine it again. So that's why we've done metallurgical drilling. So that's just the split between indicated and inferred. You can see that the majority of the inferred is in the open pits. So that's where we've been focused on this season. So that's just an overview, and I'll show you a cross-section here and just show you some of the results that we've just recently put out in the 21A zone. So I've highlighted some, 22 grams per ton gold equivalent over 34 meters, 43 grams per ton gold equivalent over 27 meters, 23 grams per ton gold equivalent over 28 meters. So you can see these are spectacularly high-grade intersections, and we've got lots more to come. We're going to be drilling here until about the end of October. And then we'll have more drill results coming out and also the metallurgical results. So that's a quick overview of SK. Our other project that we have is the Snip project. We own this 100%. We acquired it from Barrick. Again, a very high-grade past producer, produced in the 90s. It produced 1.1 million ounces at 27.5 grams per ton. It's important to note that the cutoff grade when the mine started in 91 was 12 grams per ton, and as the price of gold dropped to 99, the cutoff grades rose all the way to 24 grams per ton. So again, our thesis was simple: how much material was left behind that was below that 24 gram per ton cutoff? I'm very pleased to announce that we just announced an option deal with Hochschild. They made an investment, an equity investment into the company. If you're not familiar with Hochschild, they're Latin American-based underground miners. They specialize in narrow vein, high-grade underground mining, which is exactly what Snip is. So they made an equity investment in the company, and that earned them a right on a 60% option on Snip, and they have 3 years to decide if they want to pull the trigger on coming into the project for 60% by spending 2 times what we've spent on the project so far. So we're very excited to have Hochschild working with us, and also a member joining the board. So this is just going to give a quick overview of the Snip deposit. You can see there's some of the historic production there. Everything in gold is what was mined out. Historically, the twin zone, it was about 700,000 ounces at about 28 grams. Everything in blue is the material that's left behind right now. So anything greater than 5 grams per ton over 2 meters. That's what we think would be a mineable width now. We're looking to put a resource out on this deposit in the new year. Our resource geologist just finished up with SK. She's now going to switch over to Snip. And the resource will average somewhere in the 10 to 12 gram per ton range. So again, another very high-grade deposit. And I'll just take you through a couple cross-sections. First, the one on the left. This is an exciting new area that we're looking at drilling. So everything you see there in the gray and the blue is what was historically mined out. We drilled a surface hole in 2016 that tagged into 16 grams over 13.5 meters. Sure enough, when we pulled up all the historic information, we realized that there's a new shear structure that hasn't been mined or drilled off properly before. So this has been one of our focuses where we've drilled this past summer. We've drilled it off on very large centers, about 100 meters, and we're going to go back this winter because we are underground. We can drill year-round, which is an anomaly for the Golden Triangle. So we'll be defining this area out in this winter. And then another intersection just to show some of the results that we've been putting out this summer. This is called the Eastern Twin Zone, so it's the extension of the Twin Zone, which was historically mined. And again, some of the grades we just reported: 16 grams over 12.25 meters, 11.81 grams over 12.2 meters, 34.73 grams over 3.5 meters. So again, very high-grade intersections, and we're able to show some great continuity in the Eastern Twin Zone. So this will be an area of focus for more drilling this winter, and then this will also be included in the resource that we're putting out in the new year. So everything that we've done at Snip has been focused on the Snip mine, which is on the bottom right there. So just a very small portion, but this is to show you that there's a lot of exploration potential left on the project. We've defined the twin zone and the 200-foot wall, and it looks like the trends continue across the fault. There was a little bit of mining on Twin West, about 10,000 tons. So lots of exploration potential left on the project. To give you an idea, the twin zone that was mined out, that 700,000 ounces at 28 grams, was only 200 meters by 400 meters, but the trace has been a long strike. It's been traced for about 1 kilometer. So if you take that small footprint of 200 by 400 meters, there are many more places left on the project where you could fit a deposit of that size. So lots of exploration potential left at Snip, and we'll be doing drilling next summer to chase after some of these other targets that we have. So in summary, we've just wrapped up quite a bit of drilling at Snip and released some of those high-grade results that I just showed you. We're going to be going back to drilling underground throughout the winter, so we'll have lots of news flow out the winter, and that'll lead the way into a maiden resource estimate, which will come out in the beginning of 2019. For SK Creek, we're in the middle of a 5,000-meter drill program. The goal is to bring the inferred up to indicated and also do metallurgical drill testing. So lots of news flow to come from Skeena. Like every company, the junior that's here right now, I'm sure they feel they're massively undervalued. So we're sitting at about a $50 million Canadian market cap right now. We're well positioned because we just got that equity investment from Hochschild. So we're looking at about $7.5 million in the bank right now. And that's my very fast overview. Please ask me if you have any questions. Thank you.